It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and this is our hour to talk taxes. And I know that you might be a little distracted. It's Christmas Eve. The Bills are playing.
If you can call it
the
that.
The weather's half nice, right?
Yep, not bad. You can't complain. I mean, it's not
even
sunny,
your wife
but
didn't come, Chris, right? She's wrapping gifts.
My wife is wrapping gifts, yes.
Right, so, so we're firing on like 6 cylinders instead of 8 cylinders, but we want to help you. Look, we got 8 days until 2016 is set in stone, and so obviously we want to help you. But since this is Christmas Eve, I thought, if you maybe don't have a tax issue, but you'd like to tell us about a special Christmas memory that is especially endearing to you and want to share it with everybody, you can give us a call at 803-0930, 803-0930, star 930 on a cell phone. So obviously we want to deal with your tax issues too, but this being Christmas Eve, things that have touched your heart, because, there are so many people that are alone this time of year too, that nursing homes and things of that nature, and it's very difficult for those people that are shut-ins who maybe their children are away, things of that nature. And the whole thing about Christmas, maybe it was something poignant, maybe something wonderful, maybe a gift that you got, you thought, oh my gosh, you'd never get, or maybe God answered some miraculous prayer. You want to share it with us? 803-0930, 803-0930, star 930 on a cell phone. Chris, was there anything special that's ever happened in your Christmas memory bank?
Oh, well, I mean, I remember one Christmas my dad went out and got the Christmas tree by himself, and he was so proud because no one went with him, and we brought it in the house, brought it in the living room, and it took up 1/3 of our living room. I mean, it was just mammoth. I mean, we ended up cutting part from the top, cutting the bottom, cutting it. We made it work, but we still to this day laugh about that tree.
There was no room for people, just room for the tree.
Right, no presents under the tree.
We were at Mike's house the other day, Mike Lomos's house, and he had a ginormous
huge tree.
Ginormous tree.
Yes.
I know in all the I think of my kids when they were teenagers, and I think I had like 3 of the kids at one time were all teenagers, and I remember them one particular Christmas when they were teenagers. And if you guys have teenagers, you know what I'm talking about. Just open the box through it, open the box through it, open the box through it. Where's the receipts? I'm bringing it back. And I did my very best. But, sometimes when you're the parent of a teenager, nothing you do is
I have no idea what you're talking about.
Well, I don't know. One of yours just went out of teenage.
Yeah, but it's still the same.
Yeah, that's true. Well, that's true. Anyway, let's talk about taxes. We got 8 days till 2016. You know that if you're 70 and a half, you must start to take your required minimum distribution out of your annuities, out of your pensions, out of your IRAs, because the failure to do that is a penalty of 50% of what you don't take out. So if you're supposed to take out 20 and you don't take out anything, the penalty is $10,000. Plus it's going to be taxable when you take it out. And if you're over the 70 and a half and you have IRAs and you've never taken it out, and you think, well, nobody's ever written me, well, you don't want them to write you. You don't want there to be a question where they say 5 years after the fact, how come you haven't been withdrawing from your required minimum your IRA, and there's a required minimum distribution and the penalty is $30,000. You want to make sure you deal with it now. So if you have any questions about what we're talking about, call us or call your financial institution, but you have to have it done by December 31st.
Right. Well, if the only exception is if this is the year you turn 70 and a half,
true.
you have
can
to
double dip.
Right, you can double dip next year, but your first one would have to be by April 1st next year. So
Right, and then again, here we are, Christmas Eve, at Hanukkah time. Maybe people are getting together to give presents in the next day or so, and you're wondering what you'd like to do that would be really a practical gift. How about putting money in a 529 plan?
ooh, that sounds exciting. But
But it is exciting.
is,
I mean,
it
if
is.
grandma and grandpa don't have to, I mean, mom and dad don't have to pay for the college, and grandma and grandpa are paying for it. That's pretty
Right.
exciting.
Oh, definitely. I know. But it is.
And
It's
so,
a
and if
way
you
to
didn't open
save.
it yet, if you didn't open it yet, just write a little card and just say, "This week, Grandma and Grandpa are going to open up a college savings account for you, and do it this week." And that is a wonderful gift.
Definitely, the gift of education. I mean, and people are like, well, how impersonal? But it's a great way to save for your. Well, first of all,
I only give impersonal gifts.
but
That's it for me. I mean, it's hard though. Everybody knows it's difficult to give gifts that people would really like. So sometimes the best gifts are gifts that you can spend.
That's right. And it is. And education, you can't put down education. And, the 529 plan is a great tool. You have to the age of 30 for your beneficiary to go to school.
Right.
So if you put it in for your grandchild and maybe at 19.
And then you always talk about, but what if Grandma and Grandpa have no liability? Then the $10,000 deduction is not going to do them any good. They really are better off to give put the 529 plan
Through mom and
as
dad.
if mom and dad did it, so mom and dad can take the deduction on their tax return.
Right. Tax planning. And you have a week left. I hate to say it, but you still can do some
I'm
tax
writing
planning.
checks just before the clock strikes midnight. I'm writing checks to save money. I'll
Your
tell you
last
myself.
minute charity.
That's for sure. The other thing is harvesting tax losses. So if you haven't looked at your portfolio, and I want to tell you something, with the market going up like this, you might be shocked when you get your statement from your broker about how much your capital gains have gone up. And if you could have harvested some of the tax losses, that not everything goes up. There might be some of your stocks that have gone down. If you sell them, then dollar for dollar, that loss will offset dollar for dollar any capital gains that you have, and you can really mitigate a large capital gains situation at tax time by harvesting those losses now. I would suggest you talk to your broker right away, and if you don't know how to read your statement, you can come into our office. We're open all next week, even though it's the Christmas holiday season, and we have the office staffed, and we'll be very happy to read your financial statements for you.
Right. And how about, if you do just have winners, look at your tax bracket. Now might be the time to sell them because you may still be in the 15% bracket, which means you'll pay no tax on your capital gains, at least to the federal. I mean,
Right.
that's a nice
The state of New York
Christmas
does
gift.
not love you as much as the federal government, but the state of New York, it's really interesting. Sometimes you'll have somebody who gets such a deal on the federal, and on New York State they get clobbered. But
Yep.
the state did not follow suit relative to the 0% capital gains if you're in the 15% bracket or lower.
No, not at all. But they don't have the AMT, so sort of win-win.
And
maybe.
actually, that's one of the things that they're projecting is going to go away under Trump is the alternative
Yep,
minimum tax.
yep.
So the other thing is you have 1 week to you can contribute to your pension plan, and it's an elective deferral. So that means that you can put up to $18,000 in your pension plan, $24,000 if you're age 50 or older. If your wages were $30,000, you can put 24 away if you have a pension plan, and that might help you to get to do some tax planning too. But the whole thing is you have time to put it away. You haven't lost it. It's just it just reduces the wages that you have, and obviously when you retire, you're going to be glad you had that money.
Exactly. Yep.
Right?
Yep.
All right, I'm Esther Golias, the tax lady, 8030930, 8030930, star 930 on the cell phone. Put that hot chocolate down and tear yourself away from that Buffalo Bills game. Give us a call. We're going to take a short break. We'll be back on the other side. Oh, now there's a different twist on White Christmas. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Hey, maybe you just don't, you're just really into the Bills game. They're not doing so hot anyway. Tear yourself away from that hot cocoa and the fire in the fireplace and give us a call, 8030930, 8030930, star 930 on a cell phone. Talk to us about your tax issues or any special Christmas memory that you might want to share. Chris, let's go back to our last minute stuff. Energy credits are still in effect, so if people haven't taken the energy credit in the past, they can still do the up to $500 energy credit, or the passive solar credits are still in effect too. I don't know if you're going to get it done now within a week. I don't think
right,
so,
because they got to be installed.
You could do installation in a week.
Right.
Defer income, again, it's a little tough unless you're self-employed to have income deferred. But again, interest rates, tax rates are supposed to drop under Trump. So if you could defer your income, that would be kind of good because looking at probably 10%, 12% drop next year. Pay up all your deductions, like I said, up till midnight of the 31st. I'm out there with my checkbook, putting everything possible that I can deduct into this year, and deferring income if that's all possible, because next year the rates are supposed to drop and you'll save money on your deferred income. But this year you're paying at a higher rate, so your deductions should go into this year. And then, of course, charities, which are a wonderful thing to do this time of year.
That's right. That's right. Everybody's looking for a last-minute thing to do to save. There's the one there. How about Christmases right now? People are getting new clothes. Next week, take your old clothes and bring them to the Salvation Army,
That's
Goodwill,
right.
Save
Make
that
sure you have a
receipt,
good list
itemized
of everything,
list.
too.
Yep.
Right? Okay, why don't we go to the phones? We got Rick from Elma holding. Hey, Rick, Merry Christmas. How can we help you?
Merry Christmas. You mentioned that when you turn 70 and a half, you're required to take a disbursement.
Right.
If I turned 70 in September, does that mean that by March of the following year, I have to start to draw, or any time during the 2017 year?
You can explain it to him, Chris.
Sure. It's the year you turn 70 and a half. So if you just are going to turn 70 and a half in 2017, you have until December 31st of next year to do it.
Okay.
Okay, so, and as a matter of fact, not only do you have till December 31st, if you wanted to fluff it off up till April the 1st of 2018, you can actually take your 2017 RMD, that first part, up till April the 1st, and then by December the 31st, again, you can take a second RMD.
Right, see what the tax rates are going to be with the new administration.
If tax rates are coming down, you just might be smarter off to wait.
Okay.
Okay?
Well, thank you very much.
All right, thanks. Don't eat too much tonight.
Well, I'll try not. I can't make any promises.
I know. I'll tell you, I got 12 people coming over for dinner, so I got ham and turkey, and I made zucchini casserole and twice baked potatoes. Let's see, what else do I got? Salad, and I got pies and cakes, and
I'm coming.
It's not.
I'm leaving the show now.
It's not a low calorie affair, I'll tell you. Italian sausage and mustacholi, and I'll just keep thinking here. I just got all kinds of pans.
You must
and
be
pots.
part Italian.
I am. That's why you always have to overfeed everybody. Then you feel a lot better. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on the cell phone. I wanted to tell you we have our TV show. Obviously, we do our radio show.
That's right.
And Saturdays from 3 to 4. But we also have a TV show on WBBZ, which is Tuesdays at 6:30.
Yep,
right,
starting in the middle of January. You'll get to see more, ask some tax questions and get some answered, and you'll learn.
True. And because we can't do live phone-ins, because we don't have the same setup as we do at WBEN, what we do is we answer your emails. So if you wanted to be on the show and you want to send us your emails, we'll be very happy to answer them through our website. Just go to egtax.com, ask the tax lady, and ask a question, and we'll include you in the show. We never really say your name. We disguise it as much as possible, But, and again, if you ever have any tax questions and you need help, just call us at our corporate headquarters at 632-7886. We're always willing to help you. It's interesting. One of the things that is new this year, if you need to go see the IRS, you can't just stop in. You have to make an appointment.
That's right. That's right. Their walk-in centers they're basically closed everywhere. There's no more walk-ins. It's all appointment only. And I was talking to this lady who used to do that out in Jamestown, and she said that the phone calls, who take the phone calls for the appointments are the United Way. Make the appointment.
So they're volunteers?
They're volunteers to make the appointments for the walk-in center. She goes, it's the most craziest thing, but because of budget cuts and not planning right, because everybody retired at the same time, that's what they had to do. It's just
let me give everybody the phone number. In the event you do need to go see the IRS, we don't suggest you should go there alone. EG Tax will go with you, but if you want to make an appointment, their phone number is 844-545-5640. So it's 844-545-5640. I know it's just what you wanted to know on Christmas Eve was the IRS's walk-in center phone number to make an appointment, but that's what's happening. The other thing is, if you're somebody that this time of year you've gone into debt because, Christmas, you got to get the kids' stuff, put it on charge cards, and normally you get your refund by the end of January, that's not going to happen this year, right, Chris?
Nope. With children, if you have children, there is no refunds until the middle to end of February. The IRS has announced that probably 2-3 months ago that was how it's gonna be this year because of identity theft. And people don't think about identity theft on tax returns, but it's huge in that they're trying to make sure the right people get the right refunds.
And I will tell you, just because you don't file electronically does not preclude you from identity theft. Identity theft really has nothing to do with whether you file electronically or not. It really has to do with somebody scouting out your information and linking up your social security number, your name and date of birth, and filing a fake tax return on your behalf as if it's the real thing. So the IRS doesn't know which return is correct, the fake one they got or
the real one,
return.
Because they don't know which one is which.
So long.
Right. And if you fell victim of this and you don't know what to do, let us help you. I know someone who just paid someone almost $3,000 to try to get things straightened out. We can try
from the IRS.
From
right?
Well,
because they didn't pay the IRS, they paid somebody else to help them with
correct.
the IRS.
Correct.
All right, let's talk about some things that people don't know is taxed, is taxed. Illegal income. If you help somebody to hide income, like let's say you collude with somebody to defraud Medicaid, right? That income then is taxable to the person who's received the income in a fraud scheme.
Right.
Chris?
Yep. Oh, definitely. I mean, believe it or not, we just saw that happen a couple weeks ago. Mm-hmm. Someone came in and they couldn't believe that they got hit with this penalty.
They said, I was just helping out my friend.
Yeah.
He needed to get on Medicaid, so he asked me to take all of his income so that he could get it. But if you're helping somebody in a fraudulent situation, it really messes your situation up. So you want to make sure you don't do that because it ends up being taxable income to you. Yep. If you find a treasure, like let's say that you go diving in the Caribbean when you're in Florida, maybe in March, to get away from the cold, and you say, gee, honey, look at that gold down there. Wow, and you find a big treasure. There is a treasure trove rule that the first year you have to pay the taxes on all the money that has been recouped from this treasure. So that's something unusual.
Also, they also say, in regards to that, if you're at a Major League Baseball game, and I wish I followed baseball so I could throw names out there, but you caught someone's 300th home run or 600, a ball that's going to be worth a lot of money, that's taxable. When you catch it and keep it, that's a taxable event in your life.
Right.
I mean,
bribe money is taxable. So if somebody's giving you money to, let's say that you're a buyer for a company and they say, if you buy my stuff, I'll give you $10,000. That's taxable income. Illegal sales are taxable, like if you're selling drugs on the corner, that's taxable. If you win the Nobel Prize or if you get a genius grant, that's taxable. A lot of people don't know that is. Another thing is, people know about is scholarships. You think that scholarships are tax-free, but not all of them are they, Chris? No.
If you use them for room and board, that's taxable. If you get excess scholarships, so say your tuition is $6,000 and they give you $10,000, that other $4,000 is taxable income.
Right. And as a matter of fact, sometimes you're actually better getting the taxable income and so that you can get the AOTC, right?
That's right.
Because if you get a scholarship that pays for your education, then there would be no American Opportunity Tax Credit. But if you had it so that the scholarship money went to pay room and board, that was taxable, and the rest of the money then was deemed to have been borrowed for you for the education, you'd get the education credit. So sometimes it's better to have it be taxable because you might pay very little in income tax, but the AOTC could be $2,500. So you want to make sure that you balance that all out and see how it's all working for you, because the only way you can see some of this stuff is to literally do the math. You have to literally do the math to see how it all works.
And what do we charge for helping people to see the math on their tax return?
Nothing, because that's just part of our service.
Yep.
I'm Esther Gulius, the tax lady, 8030930, 8030930, star 930 on the cell phone. Let's take Carol quickly from Tonawanda. Hey, Carol.
Hello?
Hi.
Hi, it's Cindy.
Oh, Cindy from
Tonawanda. Cindy, I'm sorry.
It's okay. I just wanted to double check on that energy tax credit. I had a garage door installed this year and an attached garage, and it was, it is, insulated garage.
Right. So the question is, have you taken the energy credit in the past on any doors, windows, insulation, high efficiency furnace, hot water tank?
No.
Okay. Well, then you would still qualify for up to a $500 energy credit, but on the door it's going to be limited.
Okay, and so last year I paid $413 in federal income tax. Mm-hmm. My income is exactly the same this year as last year. So would it just get wiped out? Or?
It's about a $200 savings, up to a $200 savings for a door. So then
instead of owing $413, you'll owe $213, right around there.
Oh, okay. So it's not, you don't get the full $500.
No, you don't. It's a percentage of the cost of the door.
Okay, and I assume there's in the textbook that there's a formula to do it to figure.
There is. There's a form you have to fill out.
Okay. All right. Well, that's better than nothing.
That's true. Absolutely.
Is there carryover on the state, or is it just for the federal?
And this particular credit, it's only on the federal. There is a energy credit on the renewable energy like solar heat on the state of New York, but not on the federal, and on the federal, but not on this kind of credit.
Okay, not for the garage door.
Correct.
Okay. Well, I thought it was the whole thing, so it's a good thing I called to check.
Oh, I'm glad you did, because if you put the whole thing down, it wouldn't be correct. Yeah. Merry Christmas to you, Cindy.
Start saving the extra couple $100 to pay my taxes.
Right. And you never know. I mean, there might be something else in your tax situation. Can you put any money into your pension plan before the end of the year?
I don't have a pension plan. I'm living just above the poverty line.
Well, maybe you get the earned income credit.
I don't work.
Oh.
Disability, and I get alimony.
I gotcha. You can put money into an IRA for that too.
For
your alimony.
Get alimony and And disability?
Yep, for alimony you can put money in an IRA.
Oh, I didn't know that.
Yeah, so that's why. What you should do is come down. Let's look at your tax return so we can maybe save you some money. Okay?
Yeah, that'd be great because
All right.
I have $443 in Social Security disability and $1,200 a month in alimony. So anything.
Yeah, so let's take a look and see if we can't save you some money. Anyway, Merry Christmas.
Merry Christmas to you guys.
Thank you, dear. I'm Esther Gullius, a tax lady from EG Tax. We're going to take a short break for the news, and we'll be back on the other side. Little Drummer Boy, 2016. What was that? Was that a Christmas song?
It is. It's the Little Drummer Boy.
It is.
No.
Yes.
Wow, that's a Little Drummer Boy on steroids. I'm Esther Gullius, a tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We're talking about stuff you better do before the end of the 8 days. And any tax questions you might have, or if you just want to share a Christmas memory. And we've had Carol from Tonawanda hanging here for a long time. So, Carol, how can we help you?
First of all, Merry Christmas to you. And
Merry Christmas to you,
Merry Christmas.
My question, a few weeks ago, I heard you on the radio saying that about taking your child that's living with you off your taxes, even though they are now an adult.
Uh-huh.
And I was wondering, I have my son doesn't work. He hasn't worked in a year, and he's living here with me, but he's 47 years old.
That's okay. See, what people don't know is there's a broad category of children up till age 19, regardless of their income. As long as you're supporting them, you can claim them. Up to age 24 if they're a full-time student, regardless of income, as long as you're supporting them. Once they reach 24, then what happens is then you go into the regular 5 dependency tests. And this would be true of anyone. And the first thing is, do they have gross income of over $4,050? And you said he doesn't. No income, right?
Right, no income.
And you gave over 50% of his support. You're supporting him totally, right?
But how would I prove that?
Well, is he getting any income?
No.
Is he living in your house?
Yes.
Then you're supporting him, all right? Then the next one is, did he file a joint return with anyone? No, he didn't. Is he a relative, obviously, or a member of your household? And he's a citizen, so he is your dependent. So this year, when you do your 2016 return, you're going to claim your son as a dependent.
Okay.
Did he have health insurance?
He does have, what is that, NSI or from welfare. He gets
The Medicaid.
The Medicaid.
I guess that's what it's called.
Okay, now the thing is, wouldn't the whole household income has to be included
in his
for the
application
computation for this year, correct?
Yep.
So now, how much, may I ask, your approximate income, Carol?
$43,000 a year.
Okay, so starting, if you're claiming him on your tax return this year, then what's going to happen is of course, we don't know what's going to happen with Trump, though, do we?
No.
You know,
Nope.
So the thing is, what you have to look at is for the benefit of claiming him, which is going to save you maybe $1,000 in taxes. You have to say, is he going to lose his Medicaid?
Oh.
And so that would be the IFCOM. If he's going to lose the Medicaid, then it's going to cost him a lot more than the $1,000. Unless would he be able to qualify for the essential plan, Chris? You know.
That would be a question for Tim. I would say, Carol, call us on Tuesday, and we can get you, talking to Tim or Karen at our office to figure out about your son going forward.
Yeah, because here's the thing. From a tax standpoint, yes, you can claim him. From a health insurance standpoint, it may hurt. So we have to figure out. Now, there is something called the essential plan, which is only $20 a month. So if he would qualify for that, then it would only be $240. And so if you're saving $1,000 and it's going to cost $240, then it's worth it. But I don't know whether or not he would qualify. So that's why I suggest that you would call Tim or Karen, and they'll work out everything for you to make sure that everything works out bottom line for you.
Okay, and what's the number?
632-7886.
Okay, thank you so much.
All right, you're very welcome. Merry Christmas. You know, and that's the whole thing is it's not just taxes.
Not
it's
anymore.
This and this and this and this, but the bottom line is you can end up saving money on your taxes, but then it would hurt in column B, right? So what we want to make sure is that your bottom line is what works out, and that's why you want to make sure that you have somebody that's knowledgeable working with you, because it's not just did I get the right answer on my tax return. I might have done really good on my left hand, but I just shot off my right hand, and that's what you don't want to do, right? You got to look at how it all works together.
Yeah, everything, you know, who would have thought that health insurance affects your tax return?
That's for sure.
You know.
All right, and before we go to our phones, 8030930, 8030930, star 930 on your cell phone. Another thing that it's taxable is if you win a contest. A lot of times people don't realize when they win that car at the raffle, they're going to send them a 1099. That's taxable income. Debt forgiveness. Here's another one. You know, when you listen to these credit card companies, these people telling you you don't have to pay the credit card companies, there's a way to get rid of your credit card debt. Yeah, there is. And the result is it may, it's going to hurt your credit, number one. And number two, it may end up being taxable income, because unless you're have a, what's the word? Unless you're insolvent.
Yep.
Unless you're insolvent, the debt forgiveness is going to be taxable. And so you have to really look at that. As a matter of fact, I had a client I met with the other day. He had $200,000 in income, so he certainly wasn't insolvent, and he gave away on a short sale a house. And so he's got about $150,000 in debt forgiveness. And he said, oh, wow, I don't know if I would have done that if I would have known this, you know, because he had the ability to pay. He just worked it out with the bank, and they took it back.
Yep. Now, was it his personal residence?
No, it was not his personal. It was investment.
Yep, because the personal residence still qualifies for the
right,
982.
But not this. Bartering, you know, like if I say to you, I'll do your tax return for free if you come fix my plumbing, that's income.
Yep. Oh, you know, and that goes on. I'll snow blow your driveway if you do this, and
right,
you know.
That's income. Punitive damages are taxable income. People don't think that's going to be that's taxable, but it is. If you work for cash under the table, a guy just the other day said to me, "Gee, you know, I would like some work, but I want you to pay me cash." And I said, buddy, first of all, why don't you have to pay taxes on the money? I have to pay taxes on all the money I get. So, you know, any cash you get, if it's, unless it's a gift, is going to be taxable. If you performed a service, that's self-employment income.
Yep.
And when they look at what you've been spending money, and if you get audited, they look at what you spent money on, they can figure out how much money you had coming in. So if you're a panhandler, if you're somebody that's consistently making money as a panhandler, and you're making a lot of money, that's taxable income.
Yep. Oh, I mean, it's. I remember working in downtown Buffalo, and then 25 years ago, and you walk down there, and these people are still there, and it's their same line. It's just amazing, but that is income to them.
It's when they get picked up in the limo that just really rips your socks off, right?
Yes.
And then, of course, if you're selling stuff on eBay, if you sell your own stuff on eBay at a loss, it's not taxable. But let's say that you have a little small business. You go on the side of the road, you pick up trash, you straighten it up and sell it. That's taxable income.
Right.
Those are kind of things that people just don't think about. Well, let's go back to the phones. 8030930, 8030930, star 930 on your cell phone. And we have Bera from Lackawanna.
We just lost Bera.
Well, Bera, call back.
Yes.
All right, let's talk to Ronnie from Depew. Hello, Ronnie. Hello.
Ronnie, you got to turn down your radio, I think. You're a little delayed.
Okay, thank you.
Hi, how can we help you, Ron?
He's fixing his radio. Ronnie.
Okay. Hello, Ronnie.
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 Merry Christmas to you. How are you?
There we
Hey,
go.
Merry Christmas, Ronnie. What can we do for you?
And how much? What is the tax that you pay for Social Security and for pension? What is the maximum that you're going to pay on Social Security? First of all.
All right. Well, your Social Security is not going to be taxed unless half of your Social Security added to your other taxable income exceeds $32,000 and you're married filing a joint return, or $25,000 and you're single.
Not married.
Are you single or married?
Single.
Okay, so half of your Social Security added to your other taxable income would have to be more than $25,000.
Because
How much is your deferred pension?
30.
30,000.
I get $17.49 a month from Social Security, and I get $300 a month from my pension.
Okay, so you only get $300 a month from your pension, and the rest of your income comes from your Social Security.
Right?
Social Security, yes, sir.
Yep.
Yes.
Then none of it's going to be taxed.
So your Social Security is tax-free.
Right.
Tax-free.
Yep.
Right.
Now you're not retired on a disability pension, are you, Ron?
I get $300 a month from my deferred pension.
Is it a disability
How old are you?
pension?
I'll be 77.
Okay, you're okay. So the reason I was going down that alley with Ron is if he were under the age of 65 and it was a disability pension, then he would have gotten an earned income credit. That's why
Right.
I was
Yep.
following that. But you're in good shape, Ron.
Very good. Oh,
All right, Merry Christmas.
and Merry Christmas, sir. Very good. Thank you.
Thank you, sir. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We're going to take a short break. We'll be back on the other side. Oh my gosh, that was angels we have heard on high. Oh my gosh, the angels are falling from heaven. I'm Esther Golias, the tax lady from EG Tax, and we're just wishing you a Merry Christmas, a Happy Hanukkah, and a wonderful time to be with family. You know, it's there. You know, when I think when kids are little, they don't realize how important their siblings are. They're always fighting with each other. But it's interesting. I was even watching your two girls were together, Chris.
Yes.
I saw on Facebook, and I thought, gee, they're going to like each other.
For this minute.
Do they really fight?
Oh, it's getting better. It's getting better.
That's good.
You know,
That's good.
but you know, one thing, you know, Tiff just had on her the commercial that, you know, we'd love to do speeches and presentations to your group. You know, on January 21st, we're going to be teaming up with Russ Gullo at the Millennium Hotel and doing a nice seminar on taxes and exchanging. And, you know, if you have rental property and you want to get rid of it, you know, this may be a thing to do, is to do an exchange.
And I will tell you, you know, sometimes it's when somebody hears that somebody's going to do a tax-free exchange, they think, oh, this sounds really
There has to be a
complicated.
catch.
But the truth is, there's no catch. And it's really easy because pretty much the entire situation is done with Russ does all the hard stuff. And really all you need to do is find a seller to buy your house up here, your rental property here, or whatever business asset investment property you have here, and then find your replacement property that you would like to move the money to, and basically that's what happens is Russ does the sale, changes the title, and moves the balance of the asset over to the new property, so you don't get any money and you don't pay any taxes. The adjusted basis from the old property goes to the new property, and away you go, and it's absolutely unbelievable. You know, you think about it, if you have a $400,000 gain on a piece of property, that could cost you state and federal about $100,000 in taxes. It would be great to make sure that you didn't have to pay taxes on that, and that's part of what we're going to do at this seminar. So if you're an investor, or if you have rental property and you're thinking about maybe getting rid of it and you don't want to pay the taxes, there is a way around it.
That's right. That's right. You know, and use every tool you can to your advantage.
That's it. And you know, and that's the sad thing. Once you sell it or you don't get any counsel, it's too late, because once the die is cast, we can't unscrew the spaghetti. But if you would talk to us before you do it, if you have something in mind, you know, give us a call. There's no charge. You can email us. You can call us on the phone. We have real people that answer the real phone calls. As a matter of fact, we have 33 area offices where real people are.
That's right.
So
That's right.
if you're sitting home and you have a question, call the office.
Right. We're expanding out to where you are. Jamestown this year with Schultz Auto. Olean, with First Schultz Auto. We're in Ransomville in Keepo Motors. We're going to be teaming up with Mike and Glenn and putting somebody in their office. So we're there for you. And I mean, even if you need help during tax season, you can call us and we'll answer questions for you. If you know somebody, you need a last minute Christmas gift that you're not going to see somebody next week, buy them an EG Tax gift certificate.
That's right. That's right.
Why not? We've done that before. We had a wife come in to buy one for her husband because she was tired of seeing him pull his hair out and complain for 4 weekends doing his taxes.
And they probably did it wrong anyway.
Yep.
All right, and here's the other thing, some tips I wanted everybody to think about. Don't just drop your tax information off. Make sure you meet directly with your accountant. I can't tell you how many times I meet with clients that have used another accounting firm where they just drop off the information. They filled out the sheets and dropped it off to their accountant, okay? They never see the accountant. The accountant just says, come pick up the tax return, usually right around the end of the filing deadline. And there was no interaction or very little interaction between the accountant and the client. In that situation, nobody asked you any questions. They didn't say, gee, did you do energy conservation? It's not up to you, the taxpayer, to know the tax law. It's up to the accountant to make sure that everything is done accurately, that you took into consideration things. If you don't know to put it on the form, the accountant is not going to know to take it off the tax return, or they may apply it incorrectly.
It just bothers me when I ask somebody a question and they go, why didn't the person in the past ever ask me that? And it's just hard,
And so all the returns we do are with you face to face.
Yep.
So we sit there and we do the tax return in front of you. We interview you. We ask you things. We ask you about changes in your life situation, which usually means some kind of change in deductibility of a form. But make sure that if you have not been meeting directly with your accountant, that this year you say, I want a face-to-face with you. Secondly, make sure that the person doing your return is licensed.
That's right. Federal and New York State.
All of our people are licensed.
I'm sorry?
All of our people are licensed.
All of them are licensed. They all have PTINs for the federal, for New York State, done the extra education for New York State. It's something we want to make sure our people are well prepared to help you the best that they can.
And then the other thing is, if it feels wrong, if the answer is too good or too bad and it just doesn't feel right, I mean, I think most of the time you should have it double-checked anyway, but you should absolutely, in that situation, make sure somebody else looks at the tax return.
That's right. Yep. I mean, even you go over it. Look at it yourself and look to see.
If it doesn't make sense to you, ask the questions. Ask the questions. And with the tax software, I always say when people do it themselves, they don't really know what the tax return is supposed to look like.
The computer let me do it.
Yeah, and you're still responsible if the computer made a mistake. So it's not going to make a math mistake. It's going to be mathematically correct. But because you answered something incorrectly, it could have made a theory mistake and taken income that should have been taxed one way and made it taxed another way. And, of course, you're responsible for that. And the other thing is, don't guess at your figures.
That's right.
I always think I think New Year's Day is such a great time to get your stuff out. I know I'm a nerd, but get your stuff out, start adding your stuff, start looking through your checkbook, look for your contributions, start getting your things added up, because guessing on your tax return is not a good thing to do, because what you put on that return, you're responsible for.
That's right. That's right. It's your numbers, you get the money. So if they come back and say, you made a mistake, we need this money back, you're liable for it.
It's like, for instance, the American Opportunity Tax Credit only lasts for the first 4 years of higher education. So it can only be claimed 4 times. If your kid was an undergraduate for 5 years, you can't take it for 5 years.
No.
You have to move to a lifetime learning credit.
Right. And
so if you've done it, if you did it incorrectly for 5 years, they're going to send you a bill.
Right. And most kids, actually, you may think it's a 4-year program, are in school 5 years because they start in September and end in June. It's a 5-year period. So if you pay that last semester in January, February, it's not the AOTC anymore. It's going to be the Lifetime Learning Credit.
Which is a 20% credit, and it has no refundable feature. So,
Right.
And then the other thing is, and this is really important, I know you want your money, but the IRS is going to be very slow with their refunds. Don't file too soon. Now, I know people go, oh, if you want your money, you should file quickly, except you don't have the right forms. Like, for instance, you have to have the 1095A forms.
Yes. If you have insurance through the exchange, you have to have the 1095A.
And if you don't put it on there, they're going to hold up your refund till maybe June or July or August because they're going to deal with, they need the 1095A information. So filing quickly isn't going to get your money quicker. It's just going to hold it up. The other thing is you need the 1098T forms for college. If you have kids in college, you have to make sure that you have all those forms. Your unemployment.
Yep.
You have to. Of course, I think you can download.
You
that
can
now.
download
Actually,
that,
that's
but
what
if
you have to do, you have to download.
Right.
it,
Don't
right?
wait at home waiting for it to come in the mail because I don't even know if they mail them anymore. You may have to go online.
I think you have to download it off the New York State
You know,
website.
your stocks. If you sold stocks, brokerage firms don't have to January 30th. They have to like March 15th to get them out to you after their extension, which they all apply for. Right. So you got to make sure you do have everything.
And the other thing is, many times you think that you didn't sell stock, but your broker moved things around. If they moved things around, those were sales, and so that has to be reported. The IRS gets a copy of what you are going to get, and so if you file too soon, and the IRS gets a copy of this form, and you get it in March, you're going to have to amend your tax return.
Yep. And that could delay if you that could actually mean money coming back to you, and that could just delay that extra money. So.
And then the other thing I want to make sure, anybody that bought a home this year, make sure when you're doing your tax return that you look at your HUD-1 form, because on that form is going to be interim interest that you paid from the time that you closed till the first payment was due. Sometimes there's points on there that's deductible, and there's reimbursement of property taxes that you reimbursed the seller of the home unless it was a brand new build.
Right.
And that's the only place you're going to find it, and that's a really important thing to do too. And of course, if you had children this year, brand new babies, you want to make sure you have the Social Security number of the child. And if you're a non-custodial parent, daddy that's paying child support, and you haven't worked out yet who's going to claim the child, you need the 8332 signed before you can claim the child, if that's the way it's supposed to be worked out. This is a good time. It's the holiday season. People hopefully are in good moods. It would be a good time to get that 8332 signed by the custodial parent. And if you need those forms, EG Tax can help you with that too, okay? Okay, until next week. I'm Esther Gulius from EG Tax with Chris Fabian. Have a wonderful, blessed Christmas season. Happy Hanukkah, and we'll see you next Saturday.